Welcome to The Lumber Word, where industry veterans Matt Beamer, Gregg Riley, and Ashley Buckold dissect the world of commodity lumber each week. We bring you up-to-date insights on supply, demand, and market trends, sharing our trading expertise to benefit everyone in the supply chain. Join us for informative and entertaining discussions that guarantee to make you wiser about all things lumber.
Hey everybody, welcome to this week's episode of The Lumber Word with Matt Beamer from Hampton, USA, Gregg Riley from Sitka, USA, myself, Ashley from Sitka, USA. The title, guys, was 95. That's a pretty good one. I don't even know if we even counted the first 100. So pretty excited about it. I'm going to title it, let's have fun with this one. There's so much, I walked into the office this morning. I said something to Gregg and Matt, you and I were talking a little bit ago about, like, what are we going to talk about today? And he's like, there is so much to talk about. There's so much to talk about. So this one is, we're going to dedicate this to the reply guy from Twitter, which is now X. Sent me a note looking for where our podcast was today. So reply guy, we're going to dedicate this one to you. And also, Gregg, I got it.
This is heard, like, that's almost like feels like that's like a beer commercial. This one's for you.
It wasn't Casey Kasem, was it? Gregg, I got to tell you, I heard you say something on the phone today to somebody, and it was impressive. Like I was so impressed. Matt's going to love this one too. Gregg had a guy on the phone today, and I'm sitting over here in the office, and I hear him go, "You're a month late on this." And Gregg goes, "I am not a month late. I'm 3 weeks late." And I was like, he goes, "Oh, okay, but that's better." Did I hear that right? It was great.
Yeah, well, I mean, I sold something.
Let's be specific here.
Listen, I sold an item that, on, kind of accumulation off of the next run that was 3 weeks out at the time, and they didn't get it. So they had to wait for the next run, which is going this week, and hopefully we'll deliver it early next week, or you'll be getting a lot of calls, Ash.
Oh, I got it. Well, no worries. We'll take care of it. So it was great. I loved hearing. I mean, that's the way. That was positive.
Yeah,
loved it. So
next week I'll be a month late.
there you go.
It's Friday, Gregg.
Yeah. In 72 hours. So look at, I want to think about the next few weeks here. Where are we at? We had a lot of events going on, so many events going on in the world that I wanted to sign up for those dried foods things and sent to my house for 6 months supply of dried food. There was so much stuff going on in the world, right? We had terrible stuff still going on in the Southeast, which, first of all, hope everything's going well there. Thinking about those people down there. We had port strike. We had missiles flying around the world, and lumber still seems to be trading. So, what I saw in the market, it continues to be a good truck market. Increase still seems to be decent. We definitely saw a decent bounce in that one item we've been talking about of the species. Southern yellow pine had a pretty good bounce in the last few days, and I expect that to keep moving. But Matt, what was your week like this week, and what are your thoughts on the lumber side of things?
My thoughts really haven't changed that much since August. I just keep churning through things. It's really steady in my world. And I think that, having orders at the market is a good strategy. I'm not building inventory by any means. I'm not really shedding inventory either. I'm just turning stuff and trying to deal with my inventory like a professional and not get over my skis in the seasonally worst time of the year, right? And then as far as like my rail business goes, it's been real steady. I just keep getting a lot of repetitive orders. I don't know what, I'm not reading anything into that other than more of the
I've seen green Doug fir is really under a lot of pressure right now. What are the guys on the floor telling you about that?
2x4 has been soft. We've talked about how 2x4 in general in the whole country is soft, whether it's dry or green.
Yeah, but isn't green down like $50-$60 in the last few weeks?
Yeah, 2x4 is what everybody ran all at the same time, so they had to make price concessions, but 2x6 and wider has been really good. I mean, that's
Okay.
kind of the story of the West. I can't really make it any more simple than that. 2x4 is the one thing in green and dry where you have to give some ground. Now, green had to give more ground. Dry's been trading pretty close to print, and I got a bunch of orders this week based on print prices. So yeah, I mean, I think it's been pretty overall steady to good at the mothership, and for this time of year, better than what I would expect personally.
So, when you see like green, I mean, dimension down like that much, I mean, what is it? Was that just a fact? I mean, obviously that's a pretty, narrow market segment. And
Yeah.
had the price of green gotten to be the same or premium to dry? So a bunch of guys just ran green
No.
instead, or what's the factor behind?
Green's cheaper than dry, significantly so.
It is.
Like I said, all the mills in the West just keep churning out 2x4, whether they're tied to programs or maybe the mills just set up to run 2x4. But yeah, I mean, you would think that
Yeah,
after
you're right. Green Doug fir is $120 below dry Doug fir on 2x6.
right. Yeah, but it's not really 2x6 green isn't the problem. I mean, it's just
Well,
been
but I'm saying
2x4.
it's down also. It's down
Yeah.
$50 in the last 2 weeks also. I was just finding that interesting. I mean, obviously it's a market that's, like only goes a couple of places. So
Matt, is coastal hem fir 4-inch still decent, or what's coastal hem fir 4-inch?
I've been selling it in the let's say 515 Chicago to 525 Chicago range.
Mhm.
Yeah.
Yeah, it's just kind of right in line with spruce and maybe even above spruce slightly.
Mhm.
And then 2x6 is up around 600. So, it's a big spread between 2x4 and 2x6. I keep waiting for the mills to pump out more 2x6, but it doesn't seem to be happening anywhere.
I had this conversation with a guy yesterday. I said there's a better chance that between now and the end of the year that 2x4 comes up to the 2x6 price than vice versa.
Mm-hmm.
So basically 2x6 is basically the basis pivot now. It's basically,
I'm saying is like, don't look for, I mean, and 6-inch may adjust, modestly from the prices right now, but I say that I think that would be the biggest, that'd be a December surprise or a November surprise. I'm saying,
Why do you think that?
I'm thinking that there's a better chance of that.
Why?
Well, I mean, if you're number one from a European perspective, is 2x4s are still below their cost of production and where they want to produce, right? So they're going to continue to send less 2x4. They're going to send more 2x6. That should work in that favor. I think that the curtailments are, announced curtailments are not fully felt in the market and will be over the next couple of months as we move from seasonal weakness to seasonal strength. I can tell you that the hottest item that we have been selling this week, 2x4 16s.
Yeah.
They're just like, they're like candy. These are the best numbers that we've gotten in a long time, and trying to I want to push the number higher, and we're trying to it in spots, but I think there's a better chance I'm going to be selling 2x4 16s closer to $600 by Thanksgiving than I'm going to be selling 2x6 16s at $550.
So Greg, you made a good point about curtailments, but let's talk about, like, there's a lot of, they call them, I didn't come up with this, a couple people called the phantom curtailments, the ones that
quiet quitting. It's quiet quitting.
The quiet quitting that you never see happening. For instance, I mean, we're bidding every day to mills for cars, whether we get it or not. Sometimes you do, sometimes you don't, sometimes you negotiate. But we've seen in the eastern spruce markets, Ontario, Quebec, in those areas, a lot of these mills have firmed up to a point where you counter them on something, and if it's not on the phone, they send you back an email at the same price that they sent you on the email, right? and couple reasons for that, I think, are 2x3, for instance, got really active. I don't know anything about 2x3, but I've sold more 2x3 this week than a lot of things out of our mills, because some of the mills have slowed down up there. I know one of the mills Gregg talks to went to one shift and didn't really tell anybody, right? I think you're seeing a lot more of that going on in the East. Greg, I don't know if you can share it or not. Like in the Southeast, what, from the peak to the average, to our back of the napkin economics that we did in the Southeast port, like what are we seeing as far as volume now shipping out of there? Because I told somebody I think we'll be down 40 to 50% year over year on euro. And they're like, well, why do you think that? Like, didn't believe me.
Math? Then you told them
Yeah.
the math?
Well, I basically said, how many trucks ship out of the Southeast port?
Yeah, well, I was doing kind of a back of the napkin, peak Q1 2023, they had 10,000 truckloads on the ground and we're shipping, a couple hundred trucks a day.
At one reload.
Today they have 600 trucks on the ground. They're shipping, 20 or 30 trucks a day. And, there's wood coming every month, but it's at a 40% of the peak rate. I mean, we have a shipper that, in 2022 and 23, was shipping, 30 million feet a month, and now they're shipping 3.
Yeah. Let's go to some of the other things going on.
Is that a big decline?
It's a huge decline. I mean, I don't think we're the only ones noticing that, because we have a lot of people that had euro contracts calling us to see what we have to sell, which is very interesting.
Can we talk about the interest rates? Can we talk about interest rates?
Sure. I love it. So I'm Joe Consumer over here, and I can't understand why the interest rates are dropping substantially since all this talk on CNBC about rate drops. Shouldn't that be going lower on mortgages, Greg? I just don't get it.
Mortgage rates are the lowest they've been in 2 years, Ash, but I'm not anticipating mortgage rates to drop any further from this level. And a lot of people say, Greg, why do you say that? The Fed's going to cut rates. Yes, we've been operating in an inverted yield curve for the last 2.5 years. What does that mean, Greg? Well, that means that short rates are higher than long rates. That's not good. What we want to have, because that implies slower economic growth. But we have a Federal Reserve that, through the magic, is engineering the proverbial soft landing. I guess maybe it's going to be a touch and go. That would be really great. But I'm going to say things look really, really healthy when the Fed funds rate is, 3 or 3.5%, and the 2-year is 3 3/4, and the 10-year is 4 to 4.5%. I think the Fed still has plenty of room to cut short-term rates, and long-term rates will probably continue to inch higher. I mean, long-term rates have had a big move this week. They've moved from 3.7 up to almost 4%. I don't think anybody can expect that lower interest rates are going to help the home buyer. But what I do expect is that lower short-term rates will help the multifamily developer to be able to pencil out more projects in 2025. And I think that's going to be the big silver lining.
I like that a lot.
Do you like that, like Echo 101?
I just like the way you explained it like I was in 3rd grade. That was awesome.
Well, that's what Brian Westbury, that's what he always says. I like to talk to him about economics like I'm talking to 3rd graders. And I went,
I picked up on that. I liked it. It was fun.
It works when you talk to me.
Like you're talking to a golden retriever. So, premium lumber.
Love it.
Love it. Seeing more of it. I thought we would see less, but we're seeing more show up on lists still.
But it's not the stuff that we want.
No, it's not.
Yeah.
But we saw some 96-inch show up on lists the other day, the home center stuff and all that, which is a head scratcher to me, thinking that the takeout would be good, but maybe there's just some extra production in some of the areas. Do we still think that there's going to be less premium lumber available and more pull on these contracts and tough getting that lumber? We're seeing it on our mills, right? Maybe that'll continue to happen. Matt, you're pretty tied into that. I mean, still pretty good pull on all that, correct?
Yeah, I would think if there's going to be some slack in the chain that, where mills will let some of the premium go, you'll see that around Christmas time, between Thanksgiving and say end of January is when some of that stuff pops up. But
yeah,
the throughput has been fine. And so, I think some of the curtailments have an effect on the production side too, going forward. Some of those mills are going to disappear forever.
Yeah.
And they produce premium for programs. And so those SKUs need to be made up somewhere else in the system. And I just feel like whoever's going to be sticking around for it's going to end up getting more choices, where to ship lumber and how much to ship next year. And this leads me to a whole nother point, which is contract business for 2025 and just regular commodity lumber, not on premium lumber. And you guys have contracts, I've got contracts, people have contracts. And I've been asked about next year. It seems like there's more interest from the people that we sell to in shoring up next year's contract, maybe even increasing them. So I feel like there's another side effect of some curtailments that are just now starting to enter into the market that will affect next year's business.
Ash has been writing contracts lately, like out of our mills, and I keep going, wow. I mean, so how does that go? How's that, Ash? Like, you get all that documentation. He goes, no, I have to do it all.
Well, it's a lot easier selling them that way than one-offs every few weeks, right? When they're going, and it's great for a customer too, because now you have takeaway and you've added value to them, and you can then spend time selling the other stuff too, right?
Matt, you were on the road the last couple weeks. I mean, what did you see out in the field in terms of reload inventory, end user inventory? Did you do a deep dive on that?
I was in Dallas last Monday, Tuesday, Wednesday for the LAT. That's the Lumbermen's Association of Texas. It's they have an annual meeting. Usually it's some nice hotel in one of the 4 major cities there. And this year it was in Dallas. Our hotel was like right next to Dallas Cowboys Stadium. It was pretty cool location.
Did you go to the game?
I did not. Got there, too late to go to the game on Sunday.
Well, the Cowboys got whooped anyhow, so.
Yeah, by the Ravens at home. The mood and the atmosphere at the convention was really cool. People just come up to me and shake my hand and say, hey, I recognize you from the podcast, which was nice, gratifying. But then it's always good to meet people that I hadn't met before, and also meet up with people that I already had met before. It's just I like to know who I'm dealing with. I like to know faces and names. As far as lumber inventory goes, I would say the reloads were medium to medium high.
Okay.
Except for Houston. Houston's empty. I mean, there's literally nothing in the port of Houston or the Houston reloads. And the rest of the system is like, if you look at average reload inventory right there, it's in the 5 to 7 range on a scale of 1 to 10. And then if you look at customer inventory, I'd say it's more like in the 3 to 5 range. They're just keeping a working inventory. Business tends to slow down in October, November down there. Nobody's willing to build inventory right now. And so they're just churning and burning.
So you think about that as we move forward, we're going to have less production from announced curtailments. Numbers are still, I mean, do we still think that numbers are below mill break even where they're at?
I mean, if you can get 400, 420, 430 mil, Prince George, you got a fighting chance. It's not like gaping wound, but it's still a small loss, I would imagine. And then, but when the mills had to go down to 340, 350, that kills them. That doesn't work. That math doesn't work for anybody. And that doesn't matter if it's a spruce mill or a hemlock mill or a Doug fir mill. I mean, at 330, 340, 350, you're all losing money.
So
it's just the nature of the
because we've had guys on before that said, the mill break even is, like somewhere north of
500,
$500 on a 2x4 basis. You got to factor in that's the 2x4. So it's a little bit lower when you factor in what you get for utility and economy, et cetera, right? I mean, so it's probably
right. I mean, it's a net average,
right?
So,
but if that's the case, print today was $380, and I mean, I know in the East the numbers like somewhere between Great Lakes 550 and up.
Yeah, I don't think any mills in Canada are making printing money right now. I mean, they're probably losing a little bit of money. They're just not losing tons of money.
Here's the crazy thing about the Canadian market and people that buy from Canada, like us, And like a lot of people that are involved in buying it directly or indirectly, I don't know if everybody realizes next year that will go up unless something is settled another 30% in some cases. Is that right? Is that,
but that's the preliminary estimate based on crunching the numbers, and that'll come into effect next August.
So let's say it goes up.
There's a long time between here and there. We got a lot of runway between here and there.
A lot of runway, but from where we're at now, versus where it could go up, I think people have to realize it's a big number. So what it brings into play is what we saw this past week come out about quota, right? And the talk about it. I mean, there's $11 billion. I'm guessing that's the number I heard sitting out there. I guess it's somewhere in the U.S. Treasury that's been collected over the last X amount of years on the countervailing duty and et cetera. Anti-dumping. $11 billion. Not $1 million, $11 billion. That's a big number. I mean, when you think about it, there's a couple mills involved with that's a major part of their market cap, right? And
potentially,
I'm guessing at some point, if they're not already negotiating it, that is going to want to be brought back in, reeled back in on some type of negotiated settlement. Not only because the Canadian mills want it, but Greg, you had a good point is, hey, if you were in the U.S. coalition, wouldn't you want your cut of that too? I mean, that's a lot of money floating around.
Right. The last go around, the split between Canada and the U.S. was 80-20. Canadian government takes a little cut. Coalition gets, attorney's fees and a little bit extra. They created a couple of, I guess I'll call them slush funds, but they're like good things for wood promotion, et cetera, et cetera. Yeah, well, we saw one of the things was we had a major mill that monetized what some of that potential return was going to be they had a lender that lent them money with the refund being collateral.
Yeah, and I think we're still trying to figure out that was coming back off of an overpayment potentially. But the point is they wanted it now, right? And we're willing to pay a rate, whatever that is, to get that money now. And I'm thinking we're going to see a lot more play in that coming up over the next 3 or 4 months.
Yeah, no, it's definitely an interesting dynamic. That's for sure. Yeah, we're gonna have to watch that, but that could really change a lot of things for sure, depending on how that plays out. We don't pretend to have any sort of inside knowledge of that, and anything that we would imply that we would have would be complete BS.
Yes. Yeah, it would be complete BS. I'm just wondering, but though, what would the coalition guys do with that much cash coming back this time? Because it could be a significant chunk.
I mean, 76-foot yacht so that they can hang on with the longshoremen.
Those Mercedes aren't going to buy themselves.
I read in the paper today. This is wild. So they settled and whatnot. And the Journal reported that there are 50,000 longshoremen, but that only 25,000 of them work on a regular basis. Depending on your port, there's so many no-show jobs, and then there's so many no-work jobs. I mean, which means you got to show up, but you don't. I'm like going, wow. No wonder our ports are rated as some of the least efficient in the world.
You mean there's actually jobs where people get paid and don't show up outside of the government?
Oh,
there we go.
Can I do this, Ash? I'm gonna lose half our viewers, our listeners. I won't do it.
Major League Baseball starting pitchers.
Hey, how about that? How about that Mets Brewers game last night? Huh? That was a fun game. Did you see that?
I saw part of it.
It's a 3-run shot in the top of the 9th. Are you kidding me? That was awesome.
So, quick question: if you own lumber mills, you're a lumber mill owner, you're going into you're thinking about what's going on in 2025. What are the positives you see coming on price and on outtake in 2025 that keep you coming back for more? And what can you do to actually increase your mill net as far as marketing your lumber in 2025 that you may not be doing now?
Well, Ashley, you're asking some pretty profound questions. On the first
Gone
half
deep
of it,
gone deep on us, Matt. Gone deep on us.
I'm not going to touch the second one because I don't want to tell other companies how to market their lumber. But on the positive outlook, if you're a mill owner, you would think that the lowered interest rates is going to make the math work a little bit better for some people. And there's going to be a lack of multifamily in for the foreseeable future. The math doesn't work as well for them as it does for the single family. So there's going to be opportunity for single family to fill some of that gap. Our country keeps growing. The cost of doing business keeps going up. I mean, at some point in time, the cost of the commodity is gonna rise up closer to the cost of producing it, and the conditions in 2025 in the first half of the year with these curtailments going into 2025, and also the lack of participation from the Europeans, it's going to have an effect when people actually want to build inventory rather than just shed inventory. And so, the thinking goes, and here's something that's bothering me, and everybody I've talked to in the lumber business in the last month thinks exactly the same way as what
That
I
always
just said.
scares me. That scares me.
And so when everybody's on the same page, I feel like, well, maybe I need to be careful. So I'm going to be careful.
Yeah, Ashley, I think that if you own a lumber mill and you're losing money at today's market prices, that you should budget that you're going to continue to lose that money till the second quarter of next year, and figure out like, hey, how do I lose the least amount of money and stay in business, right? I mean, I just don't think you can't sit here and bank on thinking, hey, well, I think the prices, should move up there. That's not what you can budget and bank on. And we're really only talking about numbers getting back to kind of like, oh, okay, we're like basically breaking even and making a little bit of money. And lumber producers have proved that they can kill and squash any rally with no problem at all. And so that's the thing you need to guard against. I mean, we talk about this on European, and that's really tight right now. But you know what? 60, 90 days from now, we could be singing a different tune if, a bunch of guys drop a whole bunch of lumber in certain ports. Then that will, because we're in a supply push market. We're not in a demand pull. And supply push is dominated by, yeah, it's up, and then boom, slam on the table, body slam, WWF, yep. Right? So that's, to your point, Matt, why you need to be cautious. The other reason why I'm cautious is I talked to a really good friend of ours today who is a perennial bear, always bearish. Ash, I didn't share this with you before, but I didn't get a chance to. But I talked to him this morning. He's like, yeah, no, I'm positive. I'm like, wow.
Yeah.
I got to sell some futures.
Well, so look at, here's what I think about it. I think 2025 is going to be volatile. I don't know where it's exactly going. I think we're going to figure out a way to get above the cost of production because we have to, and it's going to get there. As far as if I'm a producer, I would want to reward the people that are giving me the best info and the best return. And those might not be the people sitting inside your company. So you got to be wholesale friendly to people. I'm a big believer in that, and get away from this thing of if I'm not
talk about no vested interest in that. That's good.
Well, no, there is.
Altruistic.
But hold on a second. Be tech friendly. If you get it somebody else with something new idea, do it. Go through who your current customers are and who you're selling, and make sure you're matching up the correct product to the best customers for it. If you're just trying to sell something to get rid of it, and
give us a call,
and you don't know what return to get, do that. Look at each trader that you have and what return they're actually bringing to you. And are they selling the same people? Are they opening new accounts up? Are they creative and have new ideas? Assess all the mill people. And, if you are a large mill or a smaller mid-sized mill, assess having, selling more on the outside and then testing against how you're currently market and see what the best return is. Be open to understanding risk management. Know what different forward markets are. So yes, everybody worries about getting what's coming off at the end of the planer sold right away. What are the undervalued items? What are the overvalued items? Can you go sell a bunch of overvalued items out 6 or 7 weeks before they fall? Can you get a firm price or do swaps on an item for 3 months, 6 months, 12 months and get a better return over it all? How are you managing your risk, and do you have the right people doing that? So I think as we go into these uncertain things, instead of people saying I'm helpless to understand how to get a good return for my mill, the market always will give you a way to get a good return for a mill. I mean, Greg, Matt, you and I have lived in this world forever. You can get a bid or an ask, not just in the spot market, but 3, 6, at least 3 months and 6 months. And according to what Greg said, if multifamily opens up, some of that stuff is 6 months business. But the most important thing is knowing how to understand how people talk about it. That's my thoughts.
Okay.
Deep thoughts.
I mean,
Deep thoughts.
Yeah.
So anything else we wanted to talk about before we get past the 40-minute mark?
No, I think
You want to do the Mary date dump?
One thing I wanted to ask a question about, and Charles, we maybe be a better guy at some point to ask this in the Southern Pine side. I think there's a bunch of mills still in the South without power. And I guess my question is, what are these events in the Southeast going to do to pine mills, to log supply, to all that, to the whole market in general? What's the ripple effect going to be felt across the economy on that?
Yeah, that's a TBA. I mean, I think the publication indicated there was still maybe as many as a dozen East Side mills that were not operating due to power. And, we're going to see how, I mean, listen, this hit a lot of rural communities. So, it's going to be hard to be, like logs could be an issue over the next 30 days. Pines had a really good bounce off the bottom, mostly on the curtailments, but there'd be nothing for that to have $100 run here between now and now and the end of the month.
Good thoughts.
It wasn't the greatest trade that we never put on, the 6-inch pine trade, Ash.
Yeah, it was.
Right?
It was.
I mean, we had that all teed up, and we got other things to do. And
I asked Matt to look at some reloads when he was down there, see if he could take a bunch of stuff, and couldn't transfer the funds to my account fast enough.
I've never lost money on a trade I've never lost money on a trade I didn't do.
It's only about the ones you do, right?
Exactly.
Smart guy told me that one time when I was crying in my milk. Let's do Mary date and dump.
Oh yeah.
Anybody want to start off?
I'll go. I'm married to 2x4 16s, as I indicated a little bit earlier. I think that they're the undervalued item. I mean, it's an item that's heavily produced by Europeans. We're going to see less of it relative to other sizes between here and Q1. So I really like it. It's great liquidity. I'm still out there playing the field with some 6-inch items. I've bought a few lately that I kind of went, ooh, I may have gotten too close to the fire with those, but that's okay. Dumping, when you're at these levels, there's nothing really to dump, and it gets to be a tired deal. Like, my C items, blah 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 blah. I mean, I will say is, we're shipping the balance of our MSR on a lot of 2 and better orders. So, don't be surprised if you buy 2 and better from Sitka USA, and you get a load of 1650 or 2100.
Matt,
I would go really the same with Greg. I like 2x4 16s, all grades, all species, and except for green maybe. That's just because green's been in a trough. But I mean, 2x4 16s and dry lumber have been pretty good, and I agree with you on that. Actually, you stole my idea, so I'm gonna confirm what you said.
I didn't want, I figured I'd go ahead and like scoop up all the low-lying fruit.
I'm gonna date 2x4 8s, 9s, and 10s stud production. It's like the prices, and they're liquid. Feel like that's a great date right now. And then dumping, I would just dump 2x6 and wider. Greg, I'm actually shorting your position. I'm going to find out what you bought from Ashley, then I'm going to go sell it
8,
for
10,
20
and 12,
off.
number 3. What are we going to do with that?
We always have to dump those. That's not new.
That's
But
the always dump, right?
yeah, well, not all 12s didn't always used to be
No, you're right.
like this. So
And that's weird. I
maybe
wonder
that'll
why
just be
that
a
is.
temporary thing.
Yeah.
I
think so.
honestly, I don't know. I wish I could answer that question, but no, I just feel like the 2x6 and wider is getting a little frothy, and this is the time of year where mills keep pumping it out, and the customers don't necessarily want to buy it as fast as they did a month ago. So I'm a little bearish, I guess I would say, in that regard, compared to your statement about 2x4 rising up to 2x6. I'm a contrarian to that.
Okay.
But anyhow, those are my thoughts.
Good thoughts. I'm gonna Greg, you went first. I do love 2x4 16s. So let me jump on both ends of the spectrum from the Mary side and dump side. And I'm this is Greg's idea. I'm gonna repackage and make as his. And we're pretty transparent on here. Greg, you got a theory. For every 2x6 16 we sell, we're replacing it with a 2x4 16. And I think that's smart. I mean, I think that's a great trade. And it just makes sense from one of the bigger overvalued to one of the bigger undervalued. I was wrong a couple of weeks ago about wanting to dump 2x4 18s and 20s. We keep selling them at higher numbers. Now we're almost out of them, right?
Yep.
Those have been a great item. The one thing I do like, and we're starting to keep more of, and it's because there's less euro. 2x4, every time we can see well-priced cars of 10 to 16 foot premium, just 2x4 spruce, or odd items on it, we'll buy those because there's a bigger pull for that now because there's less of it out there. We're seeing that. And if we've got it on the ground at reloads, surprisingly, we're getting really good numbers for it for prompt shipment. Date, I like your idea on studs, Matt. I like short studs, 2x4, 5, 6, and 7s, number 2. If you got those on the ground, you're able to move them. They're just cheap fiber. Truss plants are taking them, and you put a decent, they've been selling very well. I said the 2x3 market, just from the amount of inquiry I've gotten in the last month and how much we're selling, that production has to be down at many places. So 2x3 has been a great item. And dumping, I'm going to say transferring risk. I like to transfer the risk from our 2x6 position to somebody else that feels a little bit more comfortable holding it. We've done that on Euro coming over already on the water over this week. We sold a chunk of that, and we're going to continue selling that, because I think that that's a good trade. Because as Greg said, I really think that you're going to get a whole bunch. If you're selling at 600 to 700 on 6-inch on the docks on 6-inch, I'm pretty much guessing that that at some point the docks are going to get swamped with that from Europe. There's not going to be much 4-inch. And I understand that 6-inch is one of the most efficient items that they can cut over in Europe. So we're going to see more 6-inch coming over here. So that's my Mary date and dump part of the segment.
You've sold more 2x3 since you've come over than I think I've sold in my lifetime in the business, Ash.
I've sold more in the last 3 months.
You're like a 2x3 machine.
Yeah, well, you got to sell a lot of it because it's only half of everything.
Right.
There's a lot of pieces there. A lot of pieces. All right. Well, great show, guys. I appreciate Greg. Greg, you're out for the next few weeks.
Yeah,
Matt and I are talking about
the next couple of weeks. I'll definitely be listening in, see what I'm missing. So
I love it.
You kill it, guys.
Right, thanks.
Appreciate it, guys.
Cheers.
Thanks.
Yep.
Thanks for listening to this week's episode of The Lumber Word. The Lumber Word podcast is dedicated to engaging conversations about the lumber industry, including trading ideas, market trends, and evaluations of overvalued and undervalued assets. We wish to emphasize that the discussions and opinions expressed in this podcast are purely for informational and entertainment purposes. They should not be considered as financial or investment advice. We encourage our listeners to make their own financial decisions, taking into account their unique circumstances and financial goals, and to seek professional financial advice if necessary.